So, in the world of financial independence, how do you stack the odds in your favor, the odds of success? You do that by creating a strategy for meeting those basic living expenses with guaranteed or highly predictable income. Guys, let's talk about where that can come from. Social Security is a check that you're going to have till death do us part. If you have a pension, your pension is probably set up. There are some that are a time period, but most of those are going to give you a lifetime payout. And then beyond that, there are products that can give you a guaranteed income stream if you need it. But we want to look at what is your guaranteed, your required income need, and let's match that required income need with guaranteed income sources. So if you say to us, we have to have $4,000 a month every month. We just have to have that. Okay, let's look at those sources of guaranteed income. And if you're at 3,000, then you've got a gap, and we've got to go to a product that's going to fill that gap and get you to that $4,000 marker. If you have $5,000 in income coming in on a guaranteed basis, you don't have a gap. We've got your guaranteed income already covered, and then we can focus in other areas. But guys, this takes away the rolling of the dice, if you will.
It does. And Janet, I've been here with Gen Wealth now 5 years.
Mm-hmm.
And prior to coming on with Gen Wealth, I was in the insurance world.
And you were in our office a lot. So you've really got like 15 years with us.
I've been around, and probably like some of the listeners, they've heard you guys tell about the guaranteed income sources and how we're going to cover your guaranteed expenses. But now that I get to put this into practice and see this with clients and actually friends that are in retirement, just so recently sat down with a client of mine and just very nervous about the values on the statement and the noise that she hears in the media. And just doing her annual review, I was able to walk her through with, here's your guaranteed income sources. Here's the way the bucket one is going to provide. And we've got, just being able to explain to her till 2027, here's what your income's going to come from.
Yeah.
And exactly. And there's not going to be any changes in that income. And so just the process of walking her through, are your guaranteed expenses met? And here on your statement shows where this money's going to come to you until 2027. She was much more appreciative of what we've been able to put together for.
It's the ability to look at a longer time period and understand how the plan is going to work over that period of time. If we go back to earlier in the show when we were talking about Silicon Valley Bank, one of the critical mistakes that they made, guys, was assuming that things moving forward were going to be like things were at the point that they bought those bonds. Well, things changed, and they weren't ready for that change. But the same thing is true, many times in a positive way when you're looking at what's going on right now in the economy and what your balance is on this particular investment. You know what? Things change. Give it time. And if that investment is guaranteed, okay, you're good. And if that investment is something that you're not going to need for the next 15 or 20 years, then let's not focus on right now today and make decisions based on right now today, because if you do that in a different way, you're really repeating the same mistake that bank made. You're making decisions for the future based on right now never changing.